In the office market, following a bumper year in 2017 in which more than 331,000 square metres of transactions were recorded, the first 2 months of 2018 have been equally strong, with continued momentum in the Dublin office market. Several transactions that carried over into 2018 have been signed in recent weeks, while others are now nearing completion and will provide a welcome boost to Q1 take-up volumes in due course. Demand remains robust, with a number of new office requirements having been activated since Christmas, copper fastening already strong requirement volumes in this sector. In line with the year just gone, 2018 is likely to be largely characterised by the expansion of existing occupiers as opposed to take-up by large-scale new entrants. We also expect to see some further Brexit-related announcements solidifying over the course of the coming months. The increase in large requirements activated over recent months, many of which don't need to move into new premises for a number of years yet, as well as the completion of a number of significant pre-lettings in recent months, has in turn provided the impetus for the next wave of development activity to commence in the capital. Despite some comments about the potential for oversupply in this sector, according to our research, the extent of new supply coming on stream over the next 3 years appears very well controlled at this point, with funding for speculative development remaining elusive despite the current underlying demand dynamics. Demonstrating that office leasing activity is not wholly focused on the Dublin market, Jaguar recently announced plans to lease over 5,000 square metres in Shannon in County Clare, while there are a number of active requirements for office premises in Cork, Limerick and Galway. With the pace of office rental inflation now easing somewhat, prime rents in the Dublin market have remained relatively stable in the first 2 months of the year, other than in the north suburbs of the city, where prime rents have now increased to approximately €210 per square metre. A trend that's becoming increasingly evident is the growing emergence of co-working, with flexible operators having accounted for almost 5% of leasing activity in Dublin in 2017 and likely to account for an even larger proportion of take-up in the city this year. The first 2 months of 2018 have been encouraging, and we're confident that another strong year of leasing activity is in prospect. Although it does remain to be seen if last year's record take-up volumes will be replicated. To download our full bi-monthly report, please visit the newsroom of our CBRE Ireland website at news.cbre.ie.